Hello, everyone. Good afternoon or good morning, depending on where you are dialing in from. But we'd like to offer you a very warm welcome on behalf of the FinTech Association of Hong Kong. My name is Helene Lee. I'm the General Manager of the FinTech Association and also a very passionate advocate of sustainable finance and ESG. So I'm delighted to do a quick intro for this really diverse panel. I mean, ESG, I think needs no introduction, is the next mega trend, definitely. And I'm sure that with the diversity of the panel today, that Jane Dibiasio is moderating, will be in for a very, very packed kind of discussion and a lot of insights to share across the different sectors where our panelists come from. So without further ado, I really like to hand over to Jane. This is the 4th edition of our ESG series, but more to come, and delighted to have so many of us being here today from across Asia Pac and Europe, and really look forward to this discussion. Over to you, Jane.
Thank you, Helene, and great to see you and great to see everybody, and thanks to the panelists for joining us today. So my name is James Dibiasio. I'm a member of the FinTech Association of Hong Kong, and I've been helping coordinate a variety of webinars on FinTech for ESG. And my day job is I'm founder and editor of DigFin at digfingroup.com, and I cover and write about digital finance, FinTech, and digital assets. Now, before I introduce the panelists, I just want to frame the conversation. Green bonds is an important component of sustainable finance. It's a way to finance projects that are meant to be reducing our footprint on the planet, or providing or some other way of financing activities that are good for our environment and other parts of the ESG framework. Hong Kong is emerging as an important center, as befits our being a global financial center. We have a robust market here already for the issuance of green bonds. We've raised about, in total, I think in 2020, we raised about $10 billion worth of green bonds, and the total outstanding now is around $27 billion. The global total is I think only around 700 or 800 billion. So we're already a decent chunk. And about 70% of that issuance represents issuers from mainland China. So we are clearly an important conduit for helping mainland companies as well as global companies fund projects or fund assets that are either offsetting carbons or whatever is the strategy behind that particular bond. But green bonds come with a lot of challenges, which we'll hear about, but very basic one is we have to make sure that they are what they say they are, that the money is going to activities that are actually doing what the green bond issuer says it is, and that the asset is doing its job. And certifying this is a difficult process, but absolutely fundamental for investors. So what are the ways that technology can help? I mean, at the end of the day, technology itself is not the point. Technology is a tool, it's an enabler. We have real problems with green bonds. Certification is one. Public awareness of just what these are, whether it's at the institutional level or the family office level, or just the public mass retail level, is still this is new, so it's difficult. And it's been, because there's so many different ways to measure and categorize what is a green security. This creates other big challenges, particularly for investors. So again, are there ways that technology, that FinTech, can be brought to make this process better? And finally, in Hong Kong, what is the opportunity that we have if we take advantage of our growing presence as a green bond issuance center? And can we extend this to new types of investors? Can we do more to help with bringing together finance and environmental activity between Hong Kong, the global investor base, and mainland China? That's a lot of cool stuff, but a lot of challenges, and we're going to try to unpack that as best we can. So let me quickly introduce the people that we have assembled to talk about these things. They're the experts in many ways, and I'll just run this through, and then I'll start talking to our panelists. And one last note, we certainly welcome questions from the audience. So I don't necessarily need to wait until the very end of the discussion to get to your questions either. We're going to do a little bit of chatting for about a half hour or so, but I encourage you to please, put your questions onto the panel here on Zoom, and we'll do our best to get to them, because your questions are important, and that's why we're here, to help you get a better understanding of what's going on. So with that, let me introduce the panelists. We have Mushtaq Kapazi from the International Capital Markets Association. We've got Jacob Michelson, who's joining us all the way from Copenhagen. He is with Nordea Bank and has a lot of experience in the green bond market in Europe. So welcome to Hong Kong. Thanks for joining us, Jacob. And from Singapore, we've got Boon-Hiong Chan, who is with Deutsche Bank Securities Services. They're doing some interesting work in this field, and I'm very keen to hear about what's going on in Southeast Asia. So Boon, thanks for joining us. Ken Lowe, who is with HKBitX, which is an exciting digital platform company. He can tell you a little bit more about what they're doing, but again, ties to the FinTech community and to the exchange community here. And last, but definitely not least, we're very pleased to have Benedicte Nolens join us from the Bank of International Settlements Innovation Hub, Hong Kong. So thank you to everybody for taking some time out today. I'm going to start with Mushtaq Kapazi from ICMA. A big issue when it comes to anything to do with ESG, whether it's green bonds or something else, are issues around standards, definitions. And we know that different regulators and private sector firms are trying to make progress in this. So Mushtaq, why don't you introduce yourself, talk a little bit about the work you do at ICMA, and maybe you can address this opening question around issues around standards and categories.
Sure. Thank you very much, James. And thank you to the FinTech Association for inviting me. I'm really honored to be here today. So just a quick introduction. I head up the Asia Pacific office for ICMA, which is the International Capital Market Association. We've been around about 50 years internationally, really focused on the bond markets and best practices and standards across the bond markets. But more recently, and specifically since about 2014, we've been more and more involved in sustainability, starting with the promulgation of the green bond principles, which ICMA organized. Now, I want to emphasize we didn't write them because we're not climate experts, but we're basically bond market practice experts. And if you look at the history of why that actually happened, it's quite interesting, and see how that's evolved. So I'll just talk a bit briefly on that. So why did we even have the green bond principles? Well, the original reason for having the green bond principles was to prevent greenwashing, quite frankly. And the idea was that there had been a few, I would say, innovative issuances, mainly by development banks in 2007 to 2008, 2009. It started to see a few more examples of this kind of instrument called a green bond. And the market, not only the issuers themselves, who were worried about this getting diluted, but also the investors and some of the banks started to get worried that, well, are issuers that aren't very green, or issuers that don't really have green projects, going to try to label their issuance to be ESG when it's really not? And so that was really the impetus for the market itself to come together. I should remind you that this was actually a market-led initiative at the beginning, not a top-down initiative, to come up with some very basic principles, just some very kind of high-level standards to say what is a green bond and what is not. So the original idea of this was just to have voluntary market standards for disclosure and process, very general, just to help kind of give some credibility to the market. So that was back in 2014. But of course, we've seen the market really blossom since then and really boom. And while I think the numbers of issuance are important, I think it's also important to recognize that, even if you've got 800 billion, 900 billion in outstanding issuance, that's still a drop in the bucket compared to the upwards of 100 trillion outstanding bonds in the market. So there's a lot of room to grow, and we can't really pat ourselves on the back yet. But we are seeing a huge amount of development in the market. And I look at it personally in two kind of different stages since the early stages. First of all, we started to have standards that were being useful, not just to prevent greenwashing and to get credibility in the market, but also to keep things more efficient. So what I mean by that is by having a standard in place, it makes it easier for issuers to understand a certain asset class or a certain type of product. And it makes it easier for issuers and the whole ecosystem of providers and advisors to kind of agree on what a certain product is. So this was especially the case for social bonds, for sustainability bonds, and now for sustainability linked bonds, which is a kind of a new product which has been introduced last year. So I think that's helped to sort of grow the market. Now where we are in kind of 2020, 2021 is a stage where regulation and disclosure are absolutely key. And for this, data becomes super important. Harmonization of standards for reporting, for data, for talking about what you're doing as an issuer or what your climate impact is as a fund. And we talk to our members and we talk to different participants in the market. And I mean, the stories that are told are like, if you're a corporate issuer of a green bond, for example. So under the green bond principles, you have to issue an impact report, maybe an ESG report every year. So that's all fine. But what ends up happening is that different investors ask for different information. Different NGOs ask for different information, and you have to do the same thing over and over again and just cut it in different ways and mess around with the data in different ways. It's very difficult. Similarly, from an investor's point of view, you might have to look through a number of different prospectuses, ESG reports, trying to get the kind of data that you need, both for your internal risk management, for your internal climate management, but also potentially to be reporting to different regulators. So the data problems are really front and center now, and the market is clamoring for standardization here.
Yeah, and are those data problems because the standards are still up in the air, or have we gotten to the point where we have some agreement on those standards and it's more just individual firms or regulators just have their own reasons for wanting very specific types of information?
Yeah, that's a good question. I think the other panelists might even be better than I am about answering that. But what I can say from a very high level is it's kind of halfway there. So there are some very good standards out there. TCFD, for example, for reporting climate impact. There's been a lot of good work by Climate Bonds Initiative, for example, in measuring impact from different sectors. And the technical work is out there, but there's not necessarily one global standard for each of these. And still, I think it's the case that different investors have different ways of looking at this internally, right? Mm-hmm. So now I think some of the risk is actually that if you start having different disclosure requirements from different regulators, from the official sector, then that could make things even more fragmented. So I think we're sort of halfway there where there's been a lot of really good technical work on this. But at a policy level, and at a market level, we haven't really come up with very detailed standards for the kinds of things like climate impact reporting by individual sectors, for example.
Right. Okay. So it sounds like we have a lot of work to do on that agreement of the standards in the first place. But perhaps the way that investors are looking to ask for very specific things, that could be part of how they're trying to add alpha or outperform or an extra service in this. So perhaps we don't want to over standardize things because there still needs to be a way for the investors to use this to their own benefit.
Yeah, I think that's a really good point because the need for standardization is there because of course it just makes it easier to aggregate that data across your portfolio, makes it easier to report it under maybe a regulatory standard, but at the same time, investors want to distinguish themselves, corporates want to distinguish themselves. So I think there is an interesting balance to be struck there. Yeah.
Okay, good. And we might come back to some of these things, Mushtaq, but obviously the data and finding the data, getting access to the data and integrating that is going to be a huge challenge for this business. Jakob Michelson from Nordea, you're a banker. You've been working on deals in the green bond space. Tell us a little bit about your experience and perhaps the European experience when it comes to some of the good and the bad for both issuers and for investors.
Certainly. Thank you, James, and hello to everyone on this call, and big thank you for the invitation. Very happy to be able to share some thoughts, and I think these kind of sessions are really needed and great that sort of in a COVID world we can work with digitalizations to really share sort of insights. So very much supportive of all of this. You just said now banker, and I realized I haven't thought of myself as a banker for many years. I suppose there's an old stigma of saying that you're a banker, but
Your
it
secret
seems.
stay with us.
Thank you. But it actually, I would actually say, like, it seems to me now that with all of this happening in the financial markets, it might be time to revitalize the word of banker, because it might actually have some positive connotation to it once again. But no, thank you for that introduction. Maybe I'll just very briefly set the scene of Nordea and myself to give it a bit of context. Nordea is the largest bank in the Nordic region. We're one of the largest banks in Europe. We're very active in the debt capital markets and are very active in the ICMA working groups on the various different green social bonds related topics. We're one of few banks on the advisory council as well to the executive committee of the green bond and social bond principles. So we're very honored to be there and be able to share our thoughts. I also want to just maybe clarify a few points on some of the data that was mentioned in the beginning of both Mushtaq and James, your remarks. We're actually now already above $1 trillion in cumulative supply, and we crossed that threshold last year, so that's really tremendous. Obviously, that dwarfs in comparison to the global size of the bond market, but I think it's really important to recognize that if you look within pockets of the global bond market, specifically where this product has been prevalent for many years, the numbers are actually quite different. So if you look at in Sweden was one of the first markets really to grow in this. If you look at the Swedish krona markets, more than 20% of the Swedish krona market is actually in a green or social bond format. So it's a fifth of that market, more than a fifth of that market. In Europe as well, if you look at the investment grade side for corporates, it's more than 10%, edging up towards 15%. And it's about the same numbers if you look for both euro and dollar denominated SSA issuance, so issuance for sort of sovereigns and the likes. So it is actually quite a relevant product. I wouldn't necessarily go ahead and call it mainstream yet, but we've definitely moved away from the niche connotation from years past. One thing I also want to mention, and I try to do that always when sort of in these discussions, is taking a big step back and recognizing it's actually not about the individual success of a green bond market as such. This feeds into a broader development of sustainable finance, which I would argue is nothing more than a fundamental change to the entire financial markets as we're seeing them, at least from a long-term perspective. And a lot of work has obviously taken place globally, but also in Europe. And I think just to highlight sort of 3 key objectives to really underpinning the concept of sustainable finance. This has been proposed by the European Commission a few years ago. And the basic notion is that we need to move capital towards sustainable investments. We need to integrate sustainability into risk management. And then we need to foster transparency and long-termism. And those are the 3 underlying objectives of the initial action plan. And from what we've been seeing so far, it's also the same underpinnings of the renewed strategy that they're working on. So as we talk about all these different developments, I always try to clarify to myself saying that is what we're going for. That's the objectives. So with that said, I'll try to turn to the questions on this topic for this panel. There's a number of different challenges, and we could have an entire day just talking about that. So I'll focus on some of the 2 main points that have been mentioned so far, which is around reporting and maybe bringing in sort of a FinTech IT perspective to that, and then more broadly about standardization. I think it's very important to be mindful about which level in the market you're talking about, because there are certain nuances, whether you're talking about data or impact on green bonds or labeled products, or if you're talking more broadly about the market. And developments such as TCFD and others, SASB, certainly tremendously relevant, but they're a bit more at the higher level, not specifically guiding us in the labeled bond market. And it's just important to be mindful of that nuance. If you look at the labeled bond market to begin with, it's been a market that ICMA has, I would say, intentionally let develop quite naturally and with very little regulation. If you look at the green bond principles, they are so clean and simple in nature. They're not very prescriptive. They are very much setting the broader scene. And that's what we've been able to work with for the last couple of years. And that means that there's not really sort of strict requirements or guidelines for what you absolutely need to do when you talk about reporting. It's just quite simple that you need to report once a year on the allocation and also ideally on the impact of your green or social bonds. So we've seen a lot of additional work in the industry around trying to understand what does that actually mean? What are some of the more tangible aspects to it? And some tremendous work has come out from the working groups. There's a impact reporting handbook where you have very technical details for a lot of different categories around biodiversity, renewable energy, and the like. And you've also had other developments, such as more sort of broader frameworks for how to more practically work with reporting, sort of what data should you report on, and what sort of just simple processes that you can work with. There's something called the Nordic Public Sector Issuers Position Paper on green bond impact reporting, which is a tremendous document. I really recommend that. But then actually finally, and this is the challenge, we are still faced in a market where issuers have to write up their impact reports and then publish that on their website in PDF. And then investors have to proactively go to that website, download that PDF, convert that PDF into their own databases, and then they can do the calculations. Adding to that, green bonds and reporting on green bonds are not constituting what you would call a corporate action. So investors holding such green bonds will never get a notification that now there's a green bond report available. So they have to be mindful about checking when was the issuance date, fast forward 12 months, okay, now we can expect to see a report from this issuer. It's tremendously cumbersome. And clearly this is where IT can provide a solution to it. And we've seen a lot of development of that. Yeah.
Can I just ask you a question then? So Jakob, so is that because the needs of this are so different that if you're working with your vendors, the way that you've constructed your processes, that you can't also include those in the normal reporting and reconciliation and all that stuff that goes on?
Well, you actually can, and this is where the challenge is, because you can and some do. So we are, I would say, seeing that some issuers prefer to streamline it so they can use their traditional reporting cycles to also optimize it, so also working on green bond reporting. And to a certain extent, the data that you're reporting is not that different. You typically don't have to come up with new data and start recording data in a different way. The difference about green bond related reporting, impact reporting, and more broader non-financial reporting as SASB, TCFD, and so on, is that it's the format looks different, because the green bond market is very much about, tell us what has happened with the money that we have invested in your bond. How much have you allocated to certain projects, and what has been the impact of that project? And typically that is aggregated on a company level. So company needs to actually make an effort to deep dive into saying, okay, this project, that impact. And that's still what the market really prefers. Coming back to what I said before, it is about making sure you can allocate capital towards sustainable investments. That's the transparency on allocation. And it's also, again, the fostering transparency and long-termism is really getting the notion that where your money is going. We're seeing tremendous work happening in the IT space, digital space, around getting that type of reporting onto digital platforms, where essentially you as an investor can just add the amount of ISINs that you have, and then it aggregates that. But then you obviously have questions, can you aggregate impact reports from different issuers? So there's a whole host of issues as well. I would say in the next 6 to 18 months, this is where we'll see the most tangible development in the green bond market, and the development that will have the most significant impact for the relevance of this market. I take a lot of time. Yeah, sorry, because I wanted just to mention on standardization, just one brief point, if I may. So this is on reporting and specifically related to green bonds. If you look at standardization is something we've talked about in the sustainable finance space for years. And fortunately, we've actually started to work with that. We've seen last year on reporting aspects, the GRI and SASB announced they're going to harmonize their approach, and then they announced they're going to merge their approaches. You've seen the big four auditors coming out saying they'll harmonize their approaches to advising clients on non-financial reporting. So you really are starting to see a lot of practical aspects of harmonization. We do need harmonization, and we do need standardization, and I dare say we do even need regulations to a certain extent. But it needs to be very much aligned to the underlying market developments. So for instance, recently we've seen ESMA making waves or trying to sort of indicate that they would be a body well positioned to regulate what we call ESG ratings. Maybe that is a development that we still want to let go on for some time before we really add the regulator's touch to it. But this is why standardization is so important, because it flips the switch from being sort of idiosyncratic to be market related.
Yeah, I wanted to go back to, I think you had prefaced your remarks, Jakob, by saying that this is a wholesale transformation of the financial system, at least potentially. A lot of that, it sounds to me from what you said, is because the needs around reporting and integrating the data serves this function of explaining what these proceeds are doing, which is unique, I guess. You don't do that if you're just borrowing money on the bond market for generic needs. And therefore, it's creating these issues. So either you integrate that into your legacy system, or you create some sort of platform in which, from scratch, in which you reinvent financial services around this different kind of approach to why you're raising the capital. Is that a fair interpretation?
I would say so, but I would also sort of nuance it by recognizing that we spent so much time talking about green bonds and the focus on climate, etc. But this is much broader. The sustainable finance development is about the wholesale integration of sustainable finance into the financial markets, biodiversity, natural capital, etc. And you're actually seeing now in certain markets that, for instance, in Sweden, because the investor community have been for so many years now been accustomed to the fact that they get extra information with green bonds, they're starting to say to issuers when they're not issuing green bonds, okay, what are you going to use the money for? Because they're starting to recognize that that level of transparency adds more information to their investment process. And it doesn't all have to be through the narrative of green or climate. There are investments that are relevant and important to make, even though they reside outside of the green discussion. So I think more than anything, that's really the game changer. And as you can say, that's where you have to be mindful about how to integrate that into your overall approach. And I think more and more we are seeing treasury teams, finance teams recognizing that it used to be, at least in our region in the past, that you had to go to a company and issue and say, this is why you need to issue a green bond. And then it changed to, okay, we know we have to issue a green bond. And now it's changing into, forget about green bonds. This is sustainable finance for us writ large. We need to have an idea of what are we doing with ESG ratings, what's happening on the sustainability linked loan sides, what should we do in a user proceeds or target linked context when it comes to our bond funding, and how can all of this support our existing communication, investor relations work, and also feed into our equity space. So it's really transforming.
That's great. Thank you for sharing that. That's super interesting, and that leads me, I think, nicely to Ken. Ken Lo from Hong Kong Expit. You're helping develop a next generation venue trading exchange technology. Tell us a little bit about, Ken, what you think the kinds of technologies that you're working with distributed computing and so on. How does that fit into this story? Are we looking at the potential of integrating what you're doing into the existing financial system? Are you looking at creating something that would be kind of standalone? And walk us through a little bit of the potential of some of the blockchain and related technologies that you're working with.
Sure, absolutely, and appreciate for having me here with the other excellent panelists as well. And I think for us, right, Hong Kong BitX, so we are a Hong Kong startup and to be licensed digital assets exchange platform. So in Hong Kong, there's a standalone license for virtual assets, where consists of two asset classes. One is cryptocurrency, another is security token offering, which is a security and assets back, and that is exactly tied to what today's topic about the bond side, right? So right now in Hong Kong, it's a very interesting opportunity that there could be a new venue, new financial infrastructure powered by blockchain, right? Accumulating a lot of digital assets could do the final last mile, which is the securitization, which is capital market and wealth management. So a lot of people also mentioning that there are a lot of great fintech companies in Hong Kong focusing on retail and SME, right? We have different virtual banks, virtual insurance, a lot of payment companies in the past 5 years. And I think in the next 3 to 5 years, right, there will be a lot more companies focusing on capital market and wealth management. And in truth, this is where Hong Kong is renowned and top of the list, right, globally as well. So I think the bond, the STO, the ESG, how could we bind together, right? My thinking would be in numbers, right? For us as an exchange, it's very important to have a great listing rule that could also incorporate ESG element. So for us, half of our team are also from Hong Kong Stock Exchange vetting team as well from IPO perspective. So we are also thinking hard about for new assets class like digital assets, how can we bring the ESG element in terms of the project disclosure, in terms of the project eligibility? How could we bring different standards, right? And we also understand the standards are mirrored. There are a number of different standards, but the trend is going to standardize and harmonize, right? And there are a lot of efforts that associations or big four accounting firms are putting into. So we are now working with them to put the right ESG matrix in the listing rule for the digital assets. And at the end of the day, we hope to create an avenue that every digital assets on board into our exchange, it will be ESG graded. It will be easy for investors to buy into, right? And that would be a fantastic news for Hong Kong, because it could attract new fund flow as well here to buy ESG related products. Because I would say an observation from us is there are a lot of demand for ESG product from the buy side, but there are not enough projects, right? We see a lot of great momentum in Europe and US, right? But Asia Pacific overall is now on a catching up zone. So we want to do a bit more extra effort, right, as exchange. That's number one. That was the listing rule incorporating the ESG element. Number two would be the corporate action. I think just now, the previous speaker also mentioned about the difficulty in integrating different reports, right? The PDF, scanning into the documents, investor need to click in and check, and whether the disclosure is on a company level, on the project level. And for us, that is exactly one way we see a huge potential that smart contract could put in place, right? If we can imagine putting all the reporting and audit, including the dividend or voting right, etc., could be pre-coded, pre-programmed into the smart contract, right? By enhancing the automation and operational efficiency, it's easier for the investor and the issuer to increase their confidence towards the project they're working on, right? The issuer can input the different parameters of the report, right? And that could automatically link to the ESG criteria that they are assessed towards to. Investor will know the report update in an instant manner, right? And that can improve the confidence towards this asset and the issuer. So this creates a virtuous cycle around such, right? So for us, we are also providing an end-to-end S2 solutions for different issuers and investors as well. So they can come to us to create a solution together that would fit to the ESG listing criteria that is outlined by Hong Kong BX. So that will be number two, the opportunity. The third opportunity we definitely echoing to Jamie mentioned is about the distribution. For Hong Kong, this avenue by the SFC regulation, it is for professional investor. A lot of people ask me, oh, so that is only for small group of people, right? There will not be enough liquidity. But if you look at what Hong Kong Stock Exchange right now, there are more than 2,000 companies listed in Stock Exchange. Every day, there are around 200 companies having trade, of which the 200 companies, only 20 companies account for 80% of the trading volume. And most of the trading volume are coming from professional investors, right? So I do also expect there would definitely be some challenge, right, for investors to come on board on the new assets. But if referencing to a successful, I would say, avenue like Hong Kong Stock Exchange in Hong Kong, this is also driven much by the professional investor play. And your question about is, okay, Ken, so what is professional investor definition in Hong Kong? So in Hong Kong, there are a number of buckets. One is for individual who have more than $1 million. Two, you are a corporate where you have more than Hong Kong dollar 40 million cash. Third, you are a licensee with SFC Hong Kong, whether you are brokers, sponsors, advisors, or asset management firms. So for Hong Kong, there are more than 1,400 brokers, more than 300 financial advisors, around 2,000 asset management firms. And Hong Kong and Greater Bay Area, they are also promoting a lot of family offices to sell in Shanghai and also in Hong Kong, right? To pool the money between Hong Kong and China, right? To adopt the different new assets where we see opportunities about the STO, which is linked to the digital bond. So having said that, I think the three opportunities we want to create together in the market, number one, how the listing rule of us is integrating the ESG, giving investors a clear indication about what they're buying and how they're aligned to this increasing trend. Two, the smart contract adoption, incorporating different reporting, audit, transparency into the corporate actions. Three, the distribution, professional investors, and using tokenization, it can lower the investment threshold, right? and widen the investment base. So these are all a lot of new concepts, right, that we haven't seen in Hong Kong for now. But hopefully, if we come back here a year from now, we could see a number of use cases, collaborate with different parties, and we could create something very exciting for the future of Hong Kong.
How much, thank you, Ken. How much of that could be done with the current technology that banks and brokers and so on use today? And it's just a question of perhaps with smart contracts a bit more efficient, but then you have the challenge of trying to get everybody to move on to this completely brand new system. And that's a real challenge that we've seen for all kinds of blockchain projects around the world.
Yeah, I think that's a great question. So for us, right, we see blockchain not just for the operational efficiency pitch. It's more about the capital raising. So a lot of the projects, right, that we are looking at, even they are Hong Kong listed company or SME, they always need to fundraise, right? It's not as easy to fundraise as before, right, from bank or different alternative channel. But we see definitely a potential for Hong Kong to use their wealth management, say power, right, to provide funding to the right companies with cash flow, with ESG standard. So what we are creating is a big opportunity for SME financing, and here it's like a top line story, right? A lot of people would like to jump onto this bandwidth to try something on, right? So if they can use STO and ESG to become their next fundraising method, right, they will be happy to use any system you need to provide, right? Instead of challenging about how hard to use blockchain. And what we are going to smoothen the whole journey is we are creating a very user-friendly tool, right? They just come to us as a one-stop solution, and they can plug to the brokers and sponsor and asset management network in Hong Kong, right? So we want to create as less hassle as possible to provide some technological tools for them to go through this journey.
Okay, so it's great to hear that the private sector here in Hong Kong is looking to develop some ideas and some business models to address some of these issues. We've got two more speakers. Both of them are looking at proof of concepts that are related to these topics, and I want to make sure we get time for them. I also I haven't seen any questions come in on the chat, so if you've got a question for any of the panelists, please put those in now. And if and with the folks at the FinTech Association, Yami, just make sure I'm visible to me if anything comes in, so we can answer those. Boon from Deutsche Bank in Singapore, you guys are doing a POC with a blockchain company there, looking at this space. Tell us a little bit about why are you doing this project? I mean, you're a custodian, so it's almost like, is this suicide? I mean, getting rid of the people who do all the corporate actions and the reconciliation and all the other good stuff in post-trade?
Jamie, thank you very much. And hello, everybody. Good morning, good afternoon. My name is Boon. I'm from Securities Services in Deutsche Bank, based here in Singapore. I'm responsible for securities market, advocacy, as well as technology advocacy, and happen to be running this project with our Singapore FinTech partner, Stacks. So very briefly as well, from a Deutsche Bank perspective first, let me just start with a bit of Deutsche Bank and how this is actually influencing the whole thing. So we are committed to ESG, progressing the ESG, and then to continuously improve our own ESG footprint. So we've got a sustainability council that our CEO chairs, and from a DB perspective, we have been carbon neutral since 2012 as well, and actively participating in sustainability initiatives like GRI, the UNPRI, the EU taxonomy, and other various things. So all these things has actually cascaded down into our culture to see how we can actually embed ESG into our thoughts and products. So in 2019, a colleague of mine in an entrepreneur program has spun off this fund classification for ESG FinTech called Impact Alliance, IMP plus ACT Alliance, right? Her name is Claudia Copno. And recently they have just entered into an alliance with a UN development program to see how they can align investors with SDG goals. From our side now, let's talk about the security servicing team. What we see is that there are really a lot of great venues in the marketplace, not just in Asia, but also in US and in Europe. One of the things, though, is that from a issuer and investors perspective, right? And I'm coming from the custodian servicing view, is that, how would my clients who are asset managers be able to access this trading venue, secondary markets, right, efficiently and effectively, assuming that these digital assets that represents ESG or maybe they are non-ESG, are issued based on different technology ledger. And then do they need then to be direct participants to all these different trading venues, or would they actually go through a custodian like us? If they go through a custodian like us, how will we then, right, be able to ensure that their assets are adequately protected, their digital asset, and then their investors' interests are also adequately protected? So in 2019, we embarked on an internal experiment to take a look at tokenization and smart contract and what it means for custodians, this workflow. And in 2020 and 2021, we have entered into this collaboration with a Singapore leading FinTech called Stacks, headed by Ben and his team, right, to look at two things. How do we connect into different pools of liquidity that is actually underpinned by different ledger technology? Secondly, as well, then, how do we, right, look at settlement that is of digital securities based on different ledgers, together with different representation of digital currency. So, for example, central bank digital currency, stable coins, or even, right, Libra, as example. In fact, in our POC, Ben and his team, right, has actually been testing with the Libra testnet as well. So with these two goals, this actually sets the foundation for our use case, which includes the ESG one. From a DLT perspective, it's really about efficiency and effectiveness. And we'll take it, right, on the assumption that it would be cost effective as well. So from issuance to secondary market, right, then, we intersected with green or ESG. I'll use these two words interchangeably, although, I note and I acknowledge that there are technical and professional nuances between the two terms. If we say that ESG bonds, right, are about information and data payload, then the DLT level is really about process and workflow efficiency. Then at the primary issuance perspective, for in order to mitigate one of the risks that Mushtaq has mentioned, like greenwashing, could DLT and digital representation of currency, of cash, right, play a part in fostering transparency and the use of smart contract with blacklisted recipients, right? Can that support the issuer's adherence to the ESG goals and to provide investors the confidence that their money is going where it said it will go because of the transparency provided by digital currency? So that's on the primary issuance side. On the secondary side, there are two aspects of it. How can DLT support active management around corporate action, by investors, and how can their decisions be made confidentially transparent to the set of investors who are keen and who have invested into those companies, right, who see that, hey, has my asset manager invested according to SDG or ESG goals? That's possible as well. I think, in 2019, SWIFT ourselves, together with a few other banks, have embarked on a DLT for corporate action. And we have proven that, the transparency is actually possible. Then on the third point in this process, right, so we went from primary issuance to asset servicing, corporate action, and then right now on impact reporting. We recognize as well that impact reporting is really important. In the primary issuance, investors actually buy transparency. In the secondary market, investors buy impact. This is where it could get a bit more complex because, right, from a technology layer, DLT then needs to combine with things like, intelligent or OCR reader in order to read those PDFs in all the different formats that my fellow panelists have highlighted, and to be able to extract the relevant information in meaningful ways before putting them into reports that make sense to investors. So this last mile of impact reporting, which is really important, may need a bit more work. So as a summary, in this Project Banja that we are collaborating with Stacks, Ben and his team, we are looking at connecting to different pools of liquidity, ensuring interoperability. And then for our ESG use case, how can we foster, or how can we leverage the DLT characteristics of transparency and immutability to foster to lend confidence to information and reports that issuers and asset managers would be producing for investors. Thank you.
Yeah, thanks, Boon. That's great. Do you think, just going back to the comments that Jakob Michelson had made, do you see this as something that is going to be, kind of stuck in the ESG world, or do you see this as potentially work that could have broader ramifications for what you guys do?
Sorry, which one would be stuck in the ESG world?
So, I mean, the project you're working on right now. So
right.
Those three things you just enumerated. To what extent is this sort of bespoke just for meeting, kind of ESG related needs, or do you see this as something that could become relevant for other parts, broader capital markets activity that you guys carry on?
Thank you. It is applicable to the broader capital markets. At the end of the day, what we are looking at, first of all, at the base, if we think of it as a layered picture, right? At the base is actually the process of issuance to allocation, trading, settlement, custody, asset servicing, and maturity. This life cycle holds true for all digital securities, fixed income. On top of it, then, we can start building in the specific types of fixed income, of which ESG is one such class. So what we are building can be applied to the broader universe of fixed income.
Okay, great. Thank you. Benedicte, you have been a saint waiting for your turn to speak, and I'm grateful for that. Very excited to hear what you have to say at BIS, and you've also been a regulator. You've been in the venture community. You've done a lot of work on central bank digital currency, so you've got a lot of skills here. Tell us a little bit about what you're seeing. And I know that the BIS just announced through its own, I guess, you guys put out a working, I guess, this a plan for what you're going to be working on, and one of the projects is looking at green bond digitization in Hong Kong. So wrap this up for us. Where are we, and what do you think is possible? And tell us a bit about the project that you hope to get off the ground.
Yeah. So thank you very much, Jamie. So I actually wasn't very patient. I was listening to what everybody was saying, because this space is now fast evolving, and I'm starting to sometimes call it the green rush, as for the gold rush, but in green. So if you look these days on LinkedIn or in the newspaper, it's all green, and especially since Biden's appointment or confirmation. So I think we're definitely in a good flow as far as green finance is concerned, and I think that everybody on this panel has actually touched upon different parts of this, whether it is the bond markets or the disclosure side of things, or the application of new technologies. And so our POC is maybe I give you a tiny little detail on BIS and the BIS-IH. So the BIS is the convener of the central banking community. So if you look on the BIS website, you will see a lot of thought leadership pieces on FinTech or on finance, and of course also on the banking system, etc. So the BIS innovation hubs are very new operations. And the idea is that we take some of these things that we're seeing, whether it's evolution or necessary evolution, and we do experimentation with technology. So within that context, we are looking at the tokenization of a green bond. But for this proof of concept, even though technically it might not make a difference, but we would be looking at an application in the government green bond side. And furthermore, we would be looking at making it available to retail investors. And these, you could say, are the differences compared to the past projects, because there has been a lot of green bonds, corporate bonds, there's been a lot of government green bonds. There haven't been, to my recollection, any or maybe very few attempts to tokenize government bonds, right? And then even to the extent these attempts have existed, they've only been placed to institutional investors and not to retail investors. So for the purpose of this POC, what we're going to try and see is whether we can achieve efficiencies, technology inefficiency, efficiencies, not inefficiencies, eliminate inefficiency, create efficiencies by doing this tokenization. Secondly, have a broader reach, probably through the virtual banking community to the millennials, because in Hong Kong, as you know, we have 8 virtual banks, and they're building up their customer base, but it's fair to say that it's likely the new generation. And the millennials are particularly interested in this topic. In fact, if you look at Greta, you know, she blames the prior generation for a lot of what this current generation is going to have to go through. And she has a lot of followers, right? And so this generation, we think, cares a lot. And I think they might be interested in seeing a tokenized retail green bond, right? AKA very small fractions, small amounts that they can invest, very safe product, government product, and available on an app. And so then the app question is an important one, because it can indeed be through, for example, the virtual banks, which they're getting used interacting with. But furthermore, it can integrate some of what people were talking about, which is the disclosure side. So for this, because we're talking a POC as opposed to a live bond, we have the liberty of choosing a use case that is very ideal, okay? So an ideal use case assumes, for example, that the bond gets invested in solar assets. Why do I say solar assets? Because they're highly traceable. The output is highly traceable, and it can even be registered, for example, on other new technologies such as blockchain, and then it becomes immutable, right? So in a POC, the beauty that you have is you can go front to back on an ideal technology scenario, trying to meet the different interests of different parties, and a little bit adjust the ecosystem, as said, more tokenized, smaller fractions, including virtual banks, including millennials, and including ongoing disclosure through, for example, blockchain technology. So that's what we're looking at, but as said, within the confines of a POC as opposed to a live bond.
Right. Obviously, the one big thing in a Hong Kong context is that you would need a lot of regulatory changes to allow retail investors to access this sort of thing.
Well, actually, the answer is no, Jamie, because being an ex-regulator, I would, of course, have checked that. So the answer is no, because not in the context of government green bonds. And that's why the government green bonds element is important, because, and in most markets, that's the same situation. So the BIS, by the way, when we do these POCs, it's to draw broader learnings, not just for one location, but that could be used in other locations. So the POCs are broader than one location, and government bonds tend to be treated under a different process. So, but if you take the case of Hong Kong, a government bond is actually placed through the capital markets utility operated by the HKMA, whereas corporate bonds are placed, as you know, currently very much through private placement process. And then you're right, they're typically accessed by institutional investors.
Yeah. What about also the tokenization as a digital asset? Is that legal for retail to touch in many markets? Does the format make a difference?
I think that's a good question, but the point is, first of all, the regulation in a POC, again, that doesn't matter. That's why I emphasize POC, right? Yeah. But secondly, in most markets, the regulation is adjusting, you know, in Hong Kong as well. There are certain aspects where, you know, I think we'll see continued regulatory adjustment. but it goes towards some of the earlier points raised on custody, for example, like do you want to maintain custody or do you want to self-custody? Technically, in a fully tokenized world, you can self-custody. That said, I was on a panel at the AFF and we were debating there that in practice, we see that a lot of investors still want a custodian in the middle. Right. So anyway, these are not just regulatory evolutions, but you could say also market and consumer related evolutions that have not yet completed themselves.
Great. So I want to circle back to Mushtaq. I know that it's coming on 5 and you're going to have to leave us soon. So 2 things for you, Mushtaq.
Unfortunately.
Yeah, 2 things for you. First, we have a question, which I think is probably best suited for you from the audience, which is around,
Sure.
Do we have an international standards when it comes to ESG? Do we have international standards to rate companies or projects on ESG parameters? So if you could give that person a quick answer. But also, I just want to get your take on, you've been listening to all of this cool stuff.
Very cool stuff.
And from a, going back to your remarks around standards and categories, what's your take? Like, how much work do we have left? How much progress are we making?
Okay, sure. So I've got about 90 seconds before I have to jump. For your first question, the answer is there is no international standard. However, there are a lot of market players and experts out there who are rating companies on ESG. So the short answer is all of the traditional rating agencies are involved in the space. There are a number of climate expert consultancies. Also, the NGOs are involved in this as well, from a sort of gadfly perspective, which is extremely useful. So while there's no international standard for rating ESGs on a constant kind of level, it is possible to find ESG ratings for companies either for a price or for free from many different various sources, which are all quite credible in various ways. Now, what's my take on this? I think the innovation is fantastic. I think there are 2 themes that are coming out which are prominent for me. One that Jakob mentioned is the mainstreaming of this. And I think that it's going to be extremely important to going from a green bond world where a company could decide to be a green bond issuer and go through this kind of annoying process of putting forth disclosure and getting all these processes in place. That's sort of the old world. The new world is one in where basically everyone is going to have to report on ESG, not just use of proceeds, but also the impact of climate change on their own business and their own impact on climate. So I think all of these things are going to be extremely important. And I think the 2 aspects that I'm seeing here in terms of technology are making reporting more efficient, which is going to be necessary to allow more corporates to get involved here, and also to potentially increase distribution to the new generation and to retail investors. So thank you very much again for having me on. I'm sorry I have to jump a little bit early, but it's been wonderful to listen to the other panelists here.
We're very pleased you could join us today, Mushtaq. Thank you.
All right, take care. Thank you.
So for the audience, we have a little bit of time left. So if you've got any more questions, please put them in. I do just want to touch back to some of the speakers briefly. Jakob, you have been listening, and I'm interested in this question around what rails are we going to be traveling on as we move towards better reporting and all the things that you've highlighted that Mushtaq just summed up there. Are we looking at taking the legacy systems and improving them, or will we be going to something that like Ken Lowe is building and just coming up with something that's quite distinct? From a financial institution perspective, what are you seeing and what do you think of that?
That's probably the trickiest question and trickiest thing for us to get solved over the next 2 years. So if I had a simple, clean answer to you, then I would be setting up my own company. But in all honesty, it's a great question, and I can't give you a simple answer because I don't think there is one. I think it's really about bootstrapping. Fundamental change in a underlying financial market requires fundamental change to how we work and approach things. That's not going to happen overnight, so we can't just flick the switch and then that's it. I think very important, and sometimes this is forgotten a bit in the dialogues and sort of in the engagement in the market. underlining all of this, forgetting policy development, forgetting IT, underlining all of this are individual people that have to change their mindset. And that's the biggest obstacle of actually getting any of this done. So it's much more about having that transpire, and then throughout the journey, provide the relevant tools and support needed, whether that be policy guidelines and rails to sort of get us streamlined in the direction, whether that's tools to get the sort of the actual things happening and get that sort of done in a consistent way. All of that is tremendously relevant. I think it's because the challenge is we're asking all of us to do it in such a short period of time, and we constantly keep hearing this. Do you have 10 years or 9 years to get all of this sorted? So it's if I take a few different steps at sort of getting the key components to it. First of all, it is just simply a change of mindset and working with the understanding that you see the investor community is starting really to change the mindset of what an investment process looks like. And it's not because it has to be different. It just has to be complemented. It has to be sort of taking in additional information to form a better investment decision. That's essentially what they're looking to do. So underlining that, okay, there's a need for data. But then that means what kind of data? How do you harmonize the definitions of that data? Just to give you a practical and very sort of niche example, but you have differences of opinion of what concepts such as a square meter is. It sounds weird, but if you look at, for instance, reporting on real assets, buildings, even in a fairly small region such as the Nordic region, you have a difference in how a square meter is perceived in Sweden versus Denmark. So your impact data will look different whether you are the exact same building, no differences, but you're reporting on the data on building built in Sweden versus one built in Denmark. Your impact data will look different because the definition of simply a square meter is different, not by actual sort of metric systems, but how you measure it. So those are some of the examples that sort of just with time get sort of sorted out. So you need harmonization and understanding of data, and we're getting there. We're getting better at that. There's a tremendous amount of relevant organizations trying to solve at this. So for instance, in the real asset space, an organization such as GRESB, the Green Real Estate Standards Benchmark, I think it's called, or Sustainability Benchmark, they've done tremendous work in focusing specifically on the real asset side. Okay, so that gives the investors that data input to work with it there. But then when you talk about sustainability writ large, it is also about biodiversity. It is also about water management. It is also about social capital, natural capital, human capital. And we need to get an understanding of how to better integrate that into models. And then some of the questions have in the comments have sort of come up around these. I don't want to, I prefer not to call them ESG ratings because that simplifies what they're about, but we call them ESG service providers, ESG data or service providers that are all trying to support on that and get the relevant information in there. And a lot of literature has come out sort of showing how relevant they are and how irrelevant they are and how they're approaching it from different angles. So I think it's from the investor community, it will be about constantly working with these providers. And over time, you'll see a harmonization of the demand from investors. Subsequently, you'll see as there is consolidation in that space, you'll see a harmonization around products offered, and to a certain extent, a harmonization around methodologies. And so when the demand starts to get harmonized, when the product starts to get harmonized, then the supply will start to get harmonized, and that's supply from corporates. So corporates are sitting there going, okay, we're getting pulled in 1,000 different directions around what to report on. Okay, you told me TCFD, Task Force on Climate-Related Financial Disclosures. I'm a company that has very little to do with climate, for instance. If, for instance, my production is very water intensive, or if I'm an IT service company, I don't really work with climate from that perspective, especially if sort of my data warehouses is outsourced to Amazon or something like that. So you have to recognize that not all companies can approach things with the same tools. That takes time. It's as simple as that. And once that starts to transpire, then that's where we need the regulators to come in and say, okay, now we can give you the rails to further support this. So I'm sorry that it's not going to be just the flick of a switch and we're all now going to be completely fluent in working with ESG data and integration. It's going to be a messy road for the next 2 or 3 years, but I'm confident that we'll get on that path and we'll start slowly but surely making more relevant strides forward.
Yeah, great. Ken, from a startup technology company point of view, Jakob was talking about it's pretty messy and there's a lot of nuances. tech companies like to move very fast and grab users. Obviously, you're not a consumer-facing company. You're looking at the B2B institutional space, but still, you've got that mentality. So, what has to happen for you and other pure tech plays to be able to gain traction and get your business models to succeed?
Sure. I think for us, the number of key principles. One is embracing the uncertainty and working with different stakeholders, right? I mean, same as the blockchain public blockchain, right? There are a number of different renowned blockchain protocols, right? Calder, Ethereum, protocol, algorithm. So you don't know which one is the biggest winner, right? In the next 3 to 5 years, right? It's too long to talk about this, right? But what we need to embrace is the number of different standards, right? The industry is harmonizing. So we need to work with different ESG, like a certification agencies, right? Or firms that have the credibility to do this, right? Number one, I mean, that's very key. Two is we could not do things our own, right? I always advocate that even you are a fintech, a tech firm, right? Don't think about you build everything yourself. Right? Find your own partners, right? Find people that work on different vertical solutions, right? That can complement to your solution. And when you bundle together, right, it's a bigger proposition that your consumer will buy into, right? So find your alliance, right? In terms of the solution build, don't try to build everything yourself, right? And for us as an exchange, right, we see ourselves as like an orchestration platform, right, to integrate different solutions, even on the blockchain and also on the security token offering implementation part. Third, I think it's very important is to, like today, right, connect with different experts. I think successful business model derive from 3 arbitrage. One is about the information, right? 2 is capital. 3rd is talent, right? If you could not control capital, at least you need to have the information and talent arbitrage, right? So I mean, more understanding about how ESG has been played in Europe and US, I think it will be a great reference to Asia Pacific. And let's see what are the small innovation we can build upon that, right? So people have already paved it through, right? In the West, right? There are a lot of good learnings, and also there are a lot of wrongdoings that we know we don't need to avoid again, right? Don't reinvent the wheel. So that's how I see for us in Hong Kong. We can absorb a lot of good cases, right? But again, it's up to us, either you're a fintech or financial institution, to change your mindset to embrace it, right? Instead of let's wait and see. I think in fintech, the opportunity is left to pioneer. It's very hard for like Microsoft to become a fast follower approach, right? It's not easy as it was.
Okay, thank you. I've got the same pair of questions for Boon and for Benedicte. The first question for you guys is, what's going to be the way you really define the success of your POCs? And second, what's the biggest risk that will lead the POC to, I guess, not reach that happy conclusion? So Boon, you want to go first?
Okay, thank you. Thank you. So the success, actually, there's 2 groups of success. First is the technical successes. So for example, are we able to successfully, exhibit control and possession of digital assets, right, that are based on different ledger technologies. And, those can actually be pretty tricky. And, that includes from settlement to custody and then to asset servicing. And that also includes, right, the digital cash representation components as well. So those are technical goals that we have defined. The other side is actually the application goals, because this not just a matter of POC, but I think we would like to get as close to real life as possible. And therefore, how can this be applied, right? Together with our industry collaborators, we have a few, and we're really grateful for them to join us in this journey as well, to see how they can be applied to their use case. The risks that I see, right, is, well, I won't say some risks, right, but there are a bit of gray areas. Let me give 2 examples. The first one is actually on data. Typically, ESG investments will go into emerging markets. And if we actually then, right, needs to extract the data, impact data or transparency data out from that emerging markets cross-border in order for it to be reported. How much of it can be caught under data privacy and data confidentiality regulations, right? So that's one consideration. And then, how much of it is actually then under this, what they call it, localization requirements. I'm of course approaching this right from a financial institution angle, whereby we are more sensitized, right, to this sort of localization requirements. Maybe I'm thinking too much, but this is the first consideration. The second one is actually in the use of tokens in order to demonstrate transparency of proceeds that the expert panelists here have been talking about. In some of these emerging markets as well, this also falls into a gray area. Is this allowed? Is this considered to be a cryptocurrency which is prohibited? Or would it be treated as a e-money? So is this sort of clarity that needs to at least be clarified so that after our POC, right, the next steps to actually applying to real world cases that can be taken. So yeah, that's all from me. Thank you very much.
Yeah, thanks, Boon. And Benedicte, yeah, what's the happy ending for the POC, and what could go wrong?
So yeah, I tend to be a little bit optimistic about POCs because in many ways you can't really go wrong, because you're experimenting, right, and you're seeing whether it's going to work or not going to work. So sometimes I in my mind, at least, I compare it to those prototype cars, at these car shows. And if you think about it, and if you've been at these car shows as a kid, I had to go there. There was a big one in Belgium. And, either it would be a minor innovation, like, for example, the dashboard looked more slick, right? Or it would be suddenly at these bigger innovations, right? GPS was a huge one, right? And then this optimization that came into the car. But the ones that always stood out to me the most is the electric car, right? Because that was available of BMW in when I was young, and I don't want to tell you my age, but it's a while ago, okay? And so it took a very long time now, right, for BMW to want to mainstream that. So the technology was there. The car, I still remember as a kid, it looked very slick. It had no difference with the other cars, but it wasn't commercialized, right? So the prototype was successful. It took a very long time to get to adoption, right? So I think as the POC, you will be successful. But what is real success is, of course, as Boon also said, if you go live, if you go into production. And I think then the success is defined in how long that time frame is between that prototype and then, let's say, that going into real life. So real success is definitely production, but the POC in and of itself, I think, as long as you demonstrate any of these features, improvement on the dashboard, more material, the GPS, the design, and or a totally change in how the motor works, I think that of course is already progress.
And what would be one or two lessons that you hope that you're able to discern from the work you're doing now?
Yeah, so for as I mentioned to you, for Hong Kong, it's quite an interesting process right now. Any government bonds for retail are placed through 3 note issuing banks. And the process up until recently was actually incredibly paper-based, right? And quite manual seemingly from the process. Of course, the banks have added interfaces now, as they've done for your normal interface to do your bank transactions. I would say not every one of the 3 has done it though. So I think not everyone you can subscribe online, for example. So it tended to be a very manual process. So I think there is immediate opportunity to automate. But the second opportunity, and that's important for the FinTech Association, is I would be interested to hear from any virtual bank who's interested to participate in this POC. And again, it would be to the extent of thinking about, is the customer base in let's say in that future that it will take to get to production, would it be interested, that millennial customer base, in subscribing to these kind of government green bonds? And if the answer is yes, then you not only have the technological feasibility, but you have the actual use case, right? Because for a use case, you do need there to be actual interest and actual buyers or actual users. So I think for Hong Kong, the improvement can be there in the automation, but secondly, also in the involvement of the virtual banks. And so, yes, FinTech Association can play a role there.
Great. Well, I'm sure your inbox is going to fill up pretty soon from those VBs. Couple last minute questions here. Ken, someone wants to know about liquidity around security token offerings. Has anyone actually seen something of an STO in the green bond space anywhere?
Yeah, I think globally STO is an evolution from ICOs in 2018. So globally there are around like 300 STO tokens, but mostly focusing on a lot in assets like PE and VC and real estate. So more of the assets class are looking at how to provide liquidity to primary market, which has traditionally no liquidity, right? So the benchmark is not benchmarking STO to IPO, right? It would be looking at how the primary market liquidity could be empowered, right? So that would be I would say a reframe of the angle we look at STO, right? So and at least that's what we have been seeing globally. If you look into Asia Pacific and we're looking into Hong Kong, there's not yet a single STO created. So we are on a journey to create the first batch of STO in Hong Kong. That would be a lot of say challenges and opportunity as well. But definitely we will integrate some of the elements like the bond as well. It could combine the right to subscribe for yield or some ownership as well as a token. So as I also articulated the answer in the Q&A, I think using token could be quite flexible to the traditional equity or debt financing. Right? You can combine multiple assets into one token. You can extract ownership or economic right or even access rights, right? Regarding to the token, right? It really depends on the issuer's preference. But again, if you try to standardize all this non-standardization thing, right? It's not the technology that takes care of this, right? It's about where the investors buy into that. It goes back to whether this product is good enough to attract the eyeball from the investors, right? So what I want to articulate is STO, green bond issuance. I think that will be something very soon to be coming up in Hong Kong, and we are on the journey to working hard on this.
Great. And I know that I've also written about some of these projects that are popping up in Singapore and Malaysia and the Philippines and other places. So I think it's just a matter of time before somebody gets these out of the gates. Last question from the audience. Benedicte, just asking about the risks associated with green bonds and sustainable finance. You know, we've been talking about how great it is. Are there any risks for investors that they need to think about with these things?
Yeah, I think that people answered it, but to use the word that people use is the risk is greenwashing, right? Is that people call something green, but in fact the use of proceeds is not going towards what it was, what investors were expecting. Secondly, for listed equities, the risk is that, for example, if as an investor you subscribe to a fund, that your fund manager is not using exactly your definition of sustainable. And I think Jacob has touched upon it. It's much broader than climate, it's water, it's biodiversity, etc. And even the world's largest asset managers are actually at very early stages of A, participating in climate resolutions and shareholder voting processes, and B, of standardizing, you know, how they analyze broader sustainable impact of the companies that they invest in. So I mentioned that the BIS does research. So there is a research report of the BIS that shows over a long time period that in fact the companies who issued green bonds have actually not reduced their carbon footprint, their carbon emissions as a ratio of revenue. So as an investor, the only thing is be aware it may be labeled green, but that doesn't mean that the company is not having broader negative sustainability impact on diversity or otherwise. And secondly, you might want to take a closer look at the company's disclosure around these things. And if you're investing through funds, and that's through any form of fund, including retirement funds or ETFs, if you're really keen on being a sustainable investor, you really need to do your research.
Great. All right. Thank you for that explanation. It's very concise and good.
James, can I jump in with a quick comment to that?
Yeah, sure. Go ahead, Jakob.
Thank you. So it's a tremendously relevant question and very well answered by Benedicte. I want to nuance and challenge on some points. Maybe just start with, when we talk about risk, it's such a broad field. From a legal perspective, when we talk to different sort of capital markets lawyers, we often see them sort of coming back to us and say, well, actually, one of the relevant aspects that are happening is on general risks, and looking at sort of prospectuses, you have to describe the risks associated with the transaction, sort of disregarding the label as such, but just sort of what are the sustainable risk, or the risk in a sort of sustainable theme that can impact the company. So climate change can impact the company negatively by sort of flooding risk and physical risk. So it's just to recognize that when we talk about risk in this space, it actually also just transcends more broadly that there are some more relevant risks there as well. Specifically risks related to the label itself and the market itself. I recognize that greenwashing is an important topic and is something that people are mindful about. If I can be honest, it is not something I'm particularly concerned about. And I dare say that the sort of the professional part of the market that works with this on a daily basis we are in general not very concerned with this, simply by the fact that this is the virtue of what we're trying to work with. We're trying to be sincere about bringing quality to the market. If we were concerned about the risk of greenwashing sort of as a top risk, that would sort of, to a certain extent, we would be concerned with the skills and the processes that we are putting into place, which I don't think is the main concern. There are risks and concerns around greenwashing more holistically, in terms of, is the company actually going to do what they've said they're going to do? And we talked about the concept maybe of a green default. So we haven't seen that much in the market, but for instance, there was a case of Mexico City Airport Trust, an issuer a few years ago that issued green bonds to finance the building of a new airport. Leaving aside the question of whether an airport can be green, we then had a change of government in Mexico, and the new government said, we're not going to build a new airport, we're going to save money and do something else, but we're going to pay the bond holders back because we don't want to default on our bonds. So there was no financial default, but you had what you could call a green default, because the issue is that we're no longer going to issue or do any green bond related activities. So there was a clear green default there, and you actually did see that the price of the bond changed a bit. Again, just a note, again, what I said before, corporate actions, this is not a corporate action, so investors cannot see that unless they're following the market themselves, or if it's being flagged otherwise. So that is actually a risk that you are not able to pick up that information, for instance. But I would also say that there's a risk on the investors themselves in not doing their homework properly. So partly, as Benedicte said, is if you have a fund manager, is making sure that their definitions are aligned with yourself and actually challenge them on what they're doing. And you're actually seeing that some of the smaller impact-focused investors are doing this tremendously well. One example, for instance, is Affirmative Investment Management in London, a small outfit, but very dedicated in terms of what they work with, and very sort of competent in the details of that. But then more broadly, there's also risk in the label itself, because you have to recognize what the green label says. It's just that these proceeds will be green, but it doesn't say anything about what the direction of the company is. So you can have an oil company that has not committed to any transition, saying we're going to issue a green bond to finance offshore wind power, because many of these oil majors have a significant amount of green assets. And I personally believe that a oil company is just as relevant as a green bond issuer that a clean company is, because it's the underlying assets that you're financing. So you have to really be mindful about that. Just because you're buying green doesn't mean that you're buying a green company. And that's why it's so interesting to see these developments around sustainability linked bonds, because what they do instead is say, okay, we forget about the proceeds, but what we do is we look at the direction of the company. So you get a much better indication that the direction of what you're invested in is going to improve. So fast forward a few years, I very much believe that we'll see a much more common practice in the market of both having user proceeds and sustainability linked structures in place at the same time, because that's what investors want. They want to know what the money they've invested in, that's being used for, and they want to know what the direction of the company is. And so user proceeds, sustainability linked, I actually see them as being two very relevant tools to complement each other. And I think there's a risk in us not recognizing that as an opportunity for the market, but also there's a risk from the investors in not recognizing that themselves.
Great. Okay. Well, that's very, I mean, thank you for jumping on there and giving us that extra information. Obviously, it shows that there's a lot of nuance in this industry, which can create challenges for everyone, but also it means that there's going to be much more product, much more diversification and different ways to play this. If we can find ways to standardize, get the information out there, find ways to make certification easy, create, I think in many of these business models, create tokens based on smart contracts to automate as much as possible and get this into the hands as many investors as possible. With that, we're out of time really. So I want to thank the panelists, of course, for showing up and speaking for so long and in such depth and with great expertise. It's been really fascinating. And I'm grateful for you guys joining us. I'd like to thank the audience. We've had a lot of people here. I can see the numbers are still quite punchy in the participants here. So thank you for, obviously you stuck around, most of you. So I think that's a validation of the conversation you had here today. I'd like to thank two people in particular who helped me put this together. Douglas Arner from Hong Kong University, and I'm gonna get her surname wrong, but Emmanuel Pescinich from BNP Paribas Asset Management. Apologies for not pronouncing your name properly, but she's the co-chair of the Blockchain Committee. Both those people helped bring in some of the speakers that we had today. And there's actually quite a few people in a sort of an informal ESG task force who have also been contributing. Yami and her colleagues at the FinTech Association have kept everything steady for us, got all the Zoom details sorted out and handled the registrations. And so I'm grateful for their time. And of course, our fearless leader, Helene Lee, has been very helpful and supportive of getting this program together. And so I think the last thing to say is we're a week early, but the year of the rat is almost behind us. Pestilent little bastard. So I want to just wish everybody slightly early, but a happy year and a healthy year of the ox. Kung hei fat joy, gong si fat zai. For DigFin and the FinTech Association, I'm James Dibiasio. Have a great day.
Thank you very much, Jim. Thank you.
Thank you very much. Cheers.
Thank you.